Hello and welcome to MarketSquare, your go-to show for deep insights into business and economic trends. I'm Olaitan Adebayo, and today we're diving into key developments across Nigeria. Stay with us. Welcome back to MarketSquare. The United States recorded a $576 million trade surplus with Nigeria in the first half of 2025, reversing a deficit of $779 million in the same period of 2024. Data from the U.S. Census Bureau and Bureau of Economic Analysis shows that stronger American exports and weaker Nigerian shipments drove the turnaround. Between January and June, U.S. exports to Nigeria rose 41% year-on-year, climbing from $2.36 billion to $3.34 billion. Import fell 12%, dropping from $3.14 billion to $2.76 billion. This swing of a more than $1.3 billion moved Nigeria from a deficit to a surplus partner for Washington. The monthly figures highlight the sharpness of this shift. In June, U.S. exports to Nigeria surged to $919 million, up from $310 million a year earlier. Imports rose to $639 million from $493 million. The balance flipped from a deficit of $182 million in June 2024 to a surplus of $280 million in June 2025. Analysts linked the change to Nigerians' growing reliance on American manufactured goods such as machinery, vehicles, and pharmaceuticals, at a time when foreign exchange scarcity is squeezing local production. Despite the reversal with Nigeria, Africa as a whole remains a net drain on U.S. trade. The continent posted a deficit of $3.69 billion in the first half of 2025, compared with $3.61 billion a year earlier. U.S. exports to Africa increased 29% to $19.7 billion, while imports grew 24% to $23.4 billion, outpacing exports in absolute terms. Nigeria's performance stands out in this context. Only Nigeria and Egypt recorded surpluses for the U.S. together, contributing more than $3.3 billion. Egypt delivered the largest surplus at $2.73 billion, more than double the $1.31 billion recorded in 2024. American exports to U.S. grew 63%, while imports rose 15%. South Africa moved in the opposite direction, with Americans' deficit nearly doubling to $6.32 billion as imports surged 52% to $9.50 billion. Exports to South Africa grew only 11% to $3.18 billion, making it Washington's most challenging African trade partner. Algeria narrowed its deficit slightly to $571 million, while the other Africa category shifted from a $77 million surplus to $108 million deficit. The trade shifts align with new U.S. tariff measures on African partners. On August 7, Washington introduced reciprocal tariffs under a revised schedule that set Nigeria's rate at 15%, up from 14% in April. South Africa and Algeria face 30%, while Egypt remains at 10%, with duty-free access for some industrial exports under its qualifying industrial trade arrangements. Algeria faced 30%, while Egypt remains at 10%, with duty-free access for some industrial exports under its qualifying industrial zone arrangements. The new tariff, which added to existing most favored nation duties, are designed to reflect restrictions faced by American goods in African markets. They have increased pressures on resources-dependent exporters like Nigeria and Algeria, while Egypt's diversified trade structures has helped shield it from the steepest effects. The turnaround in the U.S.-Nigerian trade marks a significant shift, showing rising penetration of American goods in the Nigerian market. However, the broader African trade picture remains dominated by commodity exports, keeping the U.S. in deficit across the continent. While trade relations shape external outlook, attention is also on Nigeria's domestic economy, where new projections showed growth is on the new rise. Nigeria's economy is projected to record stronger growth in the second quarter of 2025, with analysts forecasting real GDP expansion between 3.2 and 3.9%. This would outpace both the 3.13% growth posted in the first quarter of the year and the same period in 2024. The positive outlook is driven by the recent rebasing of the GDP framework, relative exchange rate stability, and expansion across financial services, telecommunication, and industry. In the first quarter, growth was supported mainly by resilience in non-oil sectors, despite continued weakness in oil. The Purchasing Managers Index averaged 52.2% in the second quarter, up from 51.3% in the first quarter and 48 points a year earlier, indicating improved expansion in business activity. Projection shows that the non-oil sector grew between 4.1 and 4.6%, led by financial services, telecommunications, and industrial output. Oil is expected to contribute only modestly, with output flat at 1.48 million barrels per day and prices falling to about $68 per barrel, compared with $74 in the first quarter. Telecommunications remain one of the fastest growing industries, with more than 220 million subscribers and rising internet penetration. Financial services are expanding on the back of bank recapitalization and digital payment adoption, while industrial output is supported by easing rising pressures and improved FX stability. Agriculture continues to lag, growing below its long-term average of 3%. Insecurity in major food-producing states such as Benue and Plateau is weighing heavily on productivity, keeping youths low and food prices high. Macroeconomic indicators also pointed to stability. Inflation has moderated, the naira has traded within a narrow band, and foreign reserves has improved. The Nigerian exchange closed the quarter with a 13.5% gain, its strongest performance since early 2024. Analysts note that if the projections are confirmed when the National Bureau of Statistics releases its official reports, Nigeria's economy will be on the track for faster recovery. However, there are cautions that structural reforms, improved security, and investment in critical infrastructure remain necessary to sustain long-term growth. Beyond the GDP numbers, one sector making headlines is food processing, with exports showing an impressive surge driven by value-added cocoa products. Nigerians' processed food exports are gaining momentum, emerging as rare bright spot in the economy. Fresh figures show a surge in value driven mainly by a shift from exporting raw commodities to shipping more value-added products like cocoa butter, liquor, and cake. According to the National Bureau of Statistics, the prepared foodstuffs, beverage, spirits, and tobacco category jumped from about 473 billion naira in the first quarter of last year to over 1.4 trillion naira in the same period this year. That pushed its share of total exports to nearly 7%, up from less than 3% previously. Non-oil exports also climbed by almost 20% year-on-year in the first half of 2025, with cocoa byproducts alone accounting for more than 40% of the total. This shows that more Nigerian crops are leaving the country as finished product rather than raw beans. Investment in processing capacity are fueling the shift, and rising global cocoa prices are making the timing even more profitable. Still, challenges remain. Nigeria imported more than 1.6 trillion naira worth of food and beverages in the first quarter of 2025, a 5% increase from last year. That underlines a growing trade gap at a time when the country is trying to boost its export base. Experts say the quality of Nigerian food processing is improving, with more products meeting international standards and finding their way into foreign markets. Yet, many exporters, especially smaller businesses, struggle with high tariffs, restrictive policies, and long certification processes. Some resort to informal export of small consignment to bypass bureaucracy, a practice that reduces the visibility of Nigerian true export strengths. There are signs of hope. Trade partners like the United Kingdom have opened duty-free access for over 1,000 food products, creating new opportunities for African exporters. But the bigger challenge remains at home. Weak power supply, poor logistics, and lack of formal export documentation continue to limit growth. While the export of processed foods is clearly on the rise, Nigeria faces the double burden of heavy food imports and weak tracking of what actually leaves its border. Analysis formalizing the export system while supporting local manufacturers will be critical if the country wants processed foods to become a consistent driver of foreign exchange and economic growth. The US trade balance, Nigeria's second quarter growth outlook, and the surge in processed food exports reflects both the opportunities and the persistent challenges within the Nigerian economy. These developments will continue to shape policy choices and business strategies in the months ahead. That's it for today on MarketSquare. Thank you for joining me. See you on the next one.